Today I'm going to tell you the story of the most famous Forex trade in history, George Soros, when he broke the Bank of England with a $10 billion short on the British pound that netted over $1 billion in profits in a single day on Black Wednesday in 1992. Now, you might have seen my viral video where I said no day trader has ever become a billionaire or made the Forbes richest 100 person list. And a lot of the comments are, what about George Soros? He was a day trader, he shorted the pound. So I'm here to tell you the story and clear up some confusion on this. So first of all, George Soros is credited with the trade, but he didn't come up with the trade and he didn't place the trade. Who did? It was his staff. His portfolio manager, Stanley Druckenmiller, came up with the idea and came to George Soros and said, I have this idea, let's short the pound. This tells you George Soros, and to become successful at trading, is about managing people and managing money, not doing everything yourself. This is where he's a boss and is famous. He looks at Stanley Druckenmiller with a look of disgust and says, that's the stupidest thing I've ever heard. We shouldn't bet 100% of our firm's equity. We should bet 200% of our firm's equity because a trade like this happens only once every 20 years. So what happened is the British pound was pegged to the German Deutsche Mark for over a decade to try to stabilize trade in Europe. But it was forcing, in order to hold the peg, the British government was having to spend a lot of resources, keep interest rates high, and it was strangling and stifling their economy that was going into recession. So over a period of 6 months, this trade played out, starting in early 1992 and culminating in September 1992. They saw, I don't think that they can hold this position, and it's going to be in their interest to bail out of this agreement so that they can get out of recession. So what it looked like is, we're going to sell the pound, and it can't really go up very much. In theory, it can't go down, but when these things happen and they like sit on the lower bound, historically price controls don't work forever. They break at some point, and it's an asymmetric trade when you can catch the break, because it's just an insane, it's a sharp move. So that's what happened. They came in with 10 billion short, and a lot more people came in short. It broke, and then they covered. They made $1 billion a day. Send this to someone who needs to hear the story, but not day trading. No charts were used. They didn't look at a chart, and George Soros didn't even place the trade. Not a day trader. Fundamentals, long-term trading, and management. That's how he did it.